Okay, welcome to the minianalyst.com's free daily market analysis for Tuesday, September 25th. We're again looking at the cash index of the S&P 500, kind of revisiting where we were last week when we were talking about this market, where we have been. We haven't moved very far. Came up again like a magnet to the 1540 key measure of horizontal support resistance. And obviously we'd be expected to retrace off of that. We're still fully bullish, it looks like here. 20% bullish in the short term based on our measure of trend following support resistance, the red line there. 30% influence over the market is the intermediate term, that line in blue. That's a 50-period EMA exponential moving average. Also, we're still 50% bullish in the long term, so full throttle bullish bias in the S&P. Obviously, you want to be buying the market anywhere from 1540 all the way down here, and of course the 1480 to 1500 level of it's kind of a support resistance band there that will actually be the fulcrum of the market. Should we get down below here, obviously we'd be having some problems. But as it stands now, you should just be buying all the way down here to this blue line, and for an anticipation of a move that we expect could reach 1600, maybe even by year's end. Obviously, if the Fed continues to ease and the economic picture starts to pick up, it should be a nice fall through to the end of the year. If we look at momentum down here, we had a bullish crossover right here, so we moved to short-term bullish right around this area, and held that with an I-term neutral, intermediate term neutral state, which has now recently moved to bullish with this mild little flag pattern here, right shoulder, that was negated. Of course, we went to bullish on an official basis right around here at 1384 in the S&P market. And so we're bullish there, short-term bullish and intermediate-term bullish still. That's a lot of bulls. And we're looking at the average movement of the market, the directional movement. We're short-term bullish here still, although it's not particularly impressive given the lack of fall through after this strong surge higher. Nevertheless, we are still short-term bullish and intermediate term neutral. Again, we haven't gotten any fall through of this move right here, so the intermediate term perspective is going to remain neutral. If we look down at the market biases, kind of recap what we just talked about, again, we're still bullish. All three markets. This, of course, includes the Dow as well, the YM contract, and bullish there in the short term and the intermediate term. The market feel is still fully bullish, although we are certainly retracing. We would have to get a close below the low of the high day to even get this to move to gray status, much less neutral. So right now we're holding at fully short-term bullish, intermediate-term bullish as well. The momentum bullish in both time frames. The direction, again, bullish and neutral in the intermediate term, and of course the trends are fully bullish. So again, at the minianalyst.com, we're bullish. If we take a second to look at the economic front, we had two reports today. One was the Consumer Confidence Conference Board's indicator and the existing home sales. The estimate, both of which weren't particularly impressive. The consumer confidence coming in at 99.8, down from an estimate of 104.5. Not a very confident consumer, which itself was down from 105.6 the previous reading, the prior reading to that. So again, you have two camps. The indication is that this will allow the Fed to continue its easing policy, and the other side of the token is that the economy is slowing, which is going to hurt, obviously, corporate profits and earnings. So you have the earnings and interest rates battle, the dichotomy. So looking at the existing home sales, again, no new information there, just a suffering market. In fact, I believe that the existing home sales is now at a seasonally adjusted 4.3% rate, which is the lowest in 5 years. So falling 4.3% is at an annual rate is not good for the majority of us that are homeowners. But again, this was the reason for the Fed to ease last Tuesday. So we'll see what happens. What do we have coming up this week? Okay, so we have durable goods orders, jobless claims, the revision of the GDP, more home sales information, the new home sales, personal income, consumer spending, and PCE price index, the PMI, and construction spending and consumer sentiment. So those are all good reports that we'll have coming out this week, and certainly will be market moving information. Just wanted to take a look here, so see how the minianalyst.com portfolios we're doing. We have 3 main portfolios. Again, the key advantage of the minianalyst.com is to provide a well-diversified portfolio comprised of as many non-correlated and non-optimized strategies as needed. And 2 of our main portfolios are the Swinger DT and the MAP A. The MAP A is, of course, a $40,000 portfolio. The Swinger DT is a $30,000 portfolio. Those combine to make up our MAP Black with a little bonus exposure of a reserve nature. And so if we just look at the Swinger DT here in the last few days, obviously it's been pretty impressive. 49.4% is the return of the Swinger DT. Of course, this is an aggressive portfolio that trades, I believe, 11 systems across day and swing, and 4 markets. So very diversified portfolio, leading to gains of $9,480 on a $30,000 account. On Tuesday, $1,650 on Wednesday, $735 on Thursday, and losing $772.50 on Friday. Of course, right back off to the races Monday and Tuesday, up $1,720 yesterday, and at lunchtime today, your Tuesday, up another $2,020, leading to a total gain of $15,000 nearly in 6 days, or 50%. So really just one of our favorite portfolios. And of course, we're still wanted to also make mention that we're running our special. This portfolio, to access it and have it auto-traded with full automation using Strategy Runner, is $1,500 for 3 months, and I believe that's currently reduced right now to a rate of $1,200 for 3 months. So if you guys are interested in subscribing to that portfolio, an aggressive portfolio, and taking advantage of high risk, high return, risk speculative trading, then certainly just shoot an email to admin@minianalyst.com, and we'll get you that special rate if it's not on the website. Again, that's the Swinger DT portfolio. I wanted to also just take a look at the Forex. I know there's a lot of Forex traders out there. We have 5 non-correlated Forex strategies of our own, one of which is the venerable EUR-USD, the euro against the US dollar. And of course, if you look at a snapshot, we actually just sent this over to a prospective client, so we wanted to share it with you all. Certainly it's been pretty impressive, as this portfolio is. If we look down at the equity curve going back to 2003 in this strategy, obviously see the equity curve is pretty impressive. So if you're interested in trading the Forex as well, we do offer that, of course, with full automation using Strategy Runner and Global Forex and Trading, or Gain Capital. So if you're interested in those, certainly shoot us an email as well at admin@minianalyst.com. So I think that's about it. We might actually take a look at the intraday dynamics, see where we are today, but hope you enjoyed this quick market recap, and we'll see you again next time.